So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 11th Thursday. We've got what news do we always have on there? Oh yeah, yes. Unemployment claims. We got unemployment claims today. Otherwise, I think we got a fairly light schedule, and I guess a fairly interesting market here this morning. Coming over to the chart. Excuse me. So E-mini doing pretty well yesterday, although most of the move going up into the open, pretty difficult chop since then. Still kind of trying to rise to all-time highs. NASDAQ doing pretty well yesterday, and they're doing pretty well overnight. However, there have been some hiccups. For instance, the AstraZeneca vaccine is being halted in Denmark because of reports of blood clots. Treasuries rolling back considerably. So I'm still back into the 133 area, and anything below 133 I'm still concerned. But hey, you know what? It's pretty good. It's pretty good. And you can see this improving things across the curve. Oil doing really well. Gold and silver doing pretty great here. Silver coming up into the 26.5 area. Copper doing well. It is buy all of the things as the dollar gets crushed. Gabby did not start up. Why? No, Gabby. Gabby! And there's also something wrong over here. It looks like a Ninja Trader just took a crap on us. That's all. Probably I need to rebuild my workspace, or we're getting, and maybe clear cache. Let's clear cache. Not enough quotas available to process this command. Yeah, there was a problem there. They come over here. We got stuff over here. Oh, no, wait. Oh, no. Now you get to watch the intro again. I clicked the wrong button.
I can't look at this, guy.
Well, you can watch that while I'm doing the, fixing this.
You buy it and you hope that you gotta get spotted.
Oh, man.
But we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
This is going to take a while. Look at this. My cache is well over 4 gigs. 11 gigs! Well, this is really quite insane. Yeah, I guess it was just time. Well, we got 3 minutes to the non-farms here. Or not, no, why am I calling? What is wrong with me, man? I am all over the place. It's not non-farms, it's jobless claims. Continuing jobless claims. Okay, let's see if I get this. Fix this. That one. Okay. 14 gigabytes. And now it's trying to delete them. This could take a while. Good morning, Win. Thank you for all of the updates here. We're to buy all of the things, huh? Okay, is it done? It looks like it's done. So we're going to lose our level 2 history, but that's okay. Can close this, can close this. "30 seconds. Lower than the forecast, so market not really reacting to it though. So 712 versus a forecast 725. Rolls-Royce has enough funding to weather the crisis in the aviation industry caused by the pandemic. Its chief executive, there you go. Do you know of a free stock screener where we can check very basic info? Yeah, like Financial Viz, is that what it's called? That's not what it's called. FinViz. FinViz is, I don't know exactly all of the options that you have, and if that really fits you, but that's the one that everybody uses. Are you going to watch the ECB? I don't feel like it. We should, shouldn't we? Well, you don't have to pay. Come in here, Financial Biz, Screener. Performance on the week. And there you go. Where's the button that you push to search? Oh, it automatically already does it. Okay, so let's see here. Exchange any S&P 500 stock. And then we could say we want a specific. So let's do consumer cyclical. Travel services. No, we don't want travel services. What do we want? How about gambling? Let's look at gambling cycle. Oh, no, nothing there. Home improvement, leisure, luxury goods? Luxury goods. Okay, there's only one luxury good stock in the S&P 500? You know, you have to pay for live codes. Well, you have to pay for everything. All I know is that Financial Biz is far and away the most popular stock screener out there. 712. No, it was 712. It was always 712. So she's still giving her opening statement, I guess. Since this isn't just going, I'm going to get out of it. Laguard didn't like the table, evidently. Yeah, it's got a different podium. Positive claims, but market not budging. Yeah, probably because of the ECB, but... Should I turn her on? I just don't feel like it, to be honest. To be honest, I just don't feel like listening to her. I'm like hyper ADHD, and I'm not sure I can focus. Even with the news squawk in my ear, it's hard. Just fine. Fine. European Central Bank, 6.2K mark.
The downward impact of the pandemic on the projected path of inflation.
There we go.
In addition, the flexibility of purchases over time, across asset classes and among jurisdictions, will continue to support the smooth transmission of monetary policy. If favorable financing conditions can be maintained with asset purchase flows that do not exhaust the envelope over the net purchase horizon.
Yeah, I know who she is. It's just that, like...
Equally, the envelope can be recalibrated.
Usually nothing happens from it, that's all.
Favorable financing conditions to help counter.
But it's not just that. It's that as long as they're talking, the trading is really questionable.
Continue to reinvest the principal payments from maturing securities purchased under the PEP until at least the end of 23. In any case, the future roll-off.
Whatever Powell says, it's the same. I mean, it really is usually.
Interference with the appropriate monetary policy stance.
Like anytime Jim Grady. Oh, jeez.
Net purchases under our asset purchase program (APP) will continue.
Anyways,
monthly pace of
the press conference, it just kind of ends up being dumb most of the time. Like I understand the purpose of it and like how it started in the beginning and everything, but it doesn't. Like, nothing ever happens. And anytime that the market is, like, expecting him to say something on something, it never ends up being good.
We also intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date.
Well, the Treasury is pushing down again.
Rates, and in any case, for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. Third, the Governing Council decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook converge to a level.
In New York and Texas recovering quite a bit, but California's still doing poorly.
And such convergence
on
has been
unemployment
consistently reflected in underlying inflation dynamics. Finally, we will continue to provide ample liquidity through our refinancing operations. In particular, our third series of targeted longer-term refinancing operations, TLTRO, remains an attractive source of funding for banks, supporting bank lending to firms and households. Preserving favorable financing conditions over the pandemic period for all sectors of the economy remains essential to underpin economic activity and safeguard medium-term price stability. We will also continue to monitor developments in the exchange rate with regard to their possible implications for the medium-term inflation outlook. We stand ready to adjust all instruments as appropriate to ensure that inflation moves towards our aim in a sustained manner in line with our commitment to symmetry. Let me now explain our assessment in greater detail, starting with the economic analysis. Following the strong rebound in growth in the third quarter of 2020, Euro area real GDP declined by 0.7%.
I was looking through my email. Some recruiter was able to get to my email.
GDP is estimated to have contracted by 6.6%.
If you're interested, apply here. I click the link.
With the level of economic activity
Senior software engineer. Okay, what will you do? You'll be building custom enterprise software applications written in PHP. Nope. No PHP.
Incoming economic data, surveys and high-frequency indicators point to continued economic weakness in the first quarter of 2021, driven by the persistence of the pandemic and the associated
The latest Journal of Financial Markets is out.
result. Real GDP is likely to contract again in the first quarter of the year. Economic developments continue to be uneven across countries and sectors, with the services sector being more adversely affected by the restrictions on social interaction and mobility than the industrial sector, which is recovering more quickly. Although fiscal policy measures are supporting households and firms, consumers remain cautious in the light of the pandemic and its impact on employment and earnings. Moreover, weaker corporate balance sheets and elevated uncertainty about the economic outlook are still weighing on business investment. Looking ahead, the ongoing vaccination campaigns, together with the gradual relaxation of containment measures, barring any
I want Draghi back. He was more fun, right?
underpin the expectation of a firm rebound in economic activity
Well, and that's the other thing where I'm not so sure that
over the medium term
listening to LaGuardia has that much value, because
should be supported by
she just doesn't know what she's talking about.
conditions and expansion
She has gone to save Italy, yeah.
and a recovery in demand.
like I like her,
Containment measures are gradually
but she is a PR person. She's not like the Economist. And
is broadly reflected in the baseline scenario of the March 2021 ECB staff macroeconomic
forecasting stock returns, a time-dependent weighted least squares approach.
foresee annual real GDP growth at 4% in 21, 4.1% in 22, and 2.1% in 23. Compared with the December 2020 Eurosystem staff macroeconomic projections, the outlook for economic activity is broadly unchanged. Overall, the risks surrounding the euro area growth outlook over the medium term have become more balanced, although downside risks remain in the near term.
I'm gonna have to get access to this
Bolstered by the sizable
article.
fiscal stimulus and the progress in vaccination campaigns are encouraging. On the other hand, the ongoing pandemic, including the spread of virus mutations and its implications,
Maybe they'll give it to me through ResearchGate.
continue to be a source of downside risk. Euro area annual inflation increased sharply to 0.9% in January and February 21, up from minus 0.3% in December. The upswing in headline inflation reflects a number of idiosyncratic factors, such as the end of the temporary VAT rate reduction in Germany, delayed settlement period in some euro area countries, and the impact of the stronger than usual changes.
Oh, that's interesting. If you request the full text from ResearchGate, it emails the authors.
Price inflation. On the basis of current oil futures prices, headline inflation is likely to increase in the coming months. But some volatility is expected throughout the year, reflecting the changing dynamics of the factors currently pushing inflation up. These factors can be expected to fade out of annual inflation rates early next year. Underlying price pressures are expected to increase somewhat this year due to current supply constraints and the recovery in domestic demand, although pressures are expected to remain subdued overall, also reflecting low wage pressures and the past appreciation of the euro. Once the impact of the pandemic fades, the unwinding of the high level of slack, supported by accommodative fiscal and monetary policies, will contribute to
You think we should purchase it for $35?
medium-term. Survey-based measures and market-based indicators of longer-term inflation expectations remain at subdued levels, although market-based indicators have continued their gradual increase. This assessment is broadly reflected in the baseline scenario of the March 21 ECB staff macroeconomic projections for the euro area, which foresees annual inflation at 1.5% in 21, 1.2% in
Maybe I need to go down to the university and get on their computers and see if it'll let me do it. They have a Science Direct subscription.
Eurosystem staff macroeconomic projections. The outlook for inflation has been revised up for 21 and 22, largely due to temporary
Morning.
and higher energy price inflation.
She has given a long prepared statement, isn't she?
Turning to the monetary analysis.
So let me just mute here and I'll explain to you what I'm looking at here. It's a new article in the Journal of Financial Markets, March 2021. We improved the performance of stock return forecasts using predictive regressions with ordinary least square estimates weighted by a class of time-dependent functions, TWLS. To address the structural breaks in predictive relationships, these functions assign heavier weights to more recent observations. We find return predictability that is statistically and economically significant using a forecast combination of unvariate TWLS models. TWLS estimates lead to much stronger return predictability than OLS, ordinary least squares. The forecast improvement from... What does TWLS stand for? Time-dependent, time-weighted least squares? I don't know. Anyways, the forecast improvement from TWLS is also found when forecasting characteristic portfolio returns and when using newly proposed predictor variables. These findings survive a series of robustness checks. And it's online, but I can't, would have to pay $35 to get it.
Our policy measures, together with the measures adopted by national governments and other European institutions, remain essential to support bank lending conditions and access to financing, in particular for those most affected by the pandemic. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of
No.
accommodation is necessary to support economic activity and the robust convergence of inflation to to levels that are below but close to 2% over the medium term. Regarding fiscal policies, an ambitious and coordinated fiscal stance remains critical in view of the sharp contraction in the euro area economy. To this end, support from national fiscal policies should continue, given weak demand from firms and households relating to the ongoing pandemic and the associated containment measures. At the same time, fiscal measures taken in response to the pandemic emerged.
Why isn't she mentioning Dogecoin or GameStonk? Right.
And targeted in nature.
Man, GameStonk yesterday was so crazy.
Support swift recovery. The three safety nets endorsed by the European Council for workers, businesses, and governments provide important funding support. The Governing Council recognizes the key role of the Next Generation EU package and stresses the importance of it becoming operational without delay.
Did y'all roll over? Is it time to roll over in the ES?
Member states to ensure a timely ratification of the resources decision, to finalize their recovery and resilience.
Yes, it is.
And to deploy the funds for productive public spending, accompanied by productivity
We'll do it.
and structural policies.
Forget that it's the Friday. Huh.
Would allow the Next Generation EU program to contribute to a faster, stronger, and more uniform recovery, and would increase economic resilience and the growth potential of member states' economies, thereby supporting the effectiveness of monetary policy in the euro area. Such structural policies are particularly
Looks like the volume is still kind of split between them.
long-standing structural and institutional weaknesses, and in accelerating
Kevin says no way, volume too low.
digital transitions. Thank you very much.
That could change when the market opens, but
Thank you very much, Madame Lagarde. And as the President said, we have changed a little bit the setup and the visual of the press conference, and we hope you like it. And now the first question goes to Johanna Treek of Politico EU. Johanna, please.
Yes, thank you very much. This is Johanna. Ms. Lagarde, you announced that the ECB will significantly increase the bond buys over the next few months. Given the inbuilt flexibility that you have,
time-dependent weighted least squares.
so far. And my second question would be, you said significantly. Could you perhaps quantify that for us a little bit? Where does it start? At 25 billion a week or closer to 30 billion a week? Thank you very much.
Well, thank you so much.
Last 4 to 5 rollovers, the old contracts still had higher volume.
Is really why did we not start?
Well, lighter volume doesn't necessarily bother me.
Of course, we have flexibility, but we made a commitment back in December that we would preserve favorable financing conditions that would entail tightening, that would be that would prevent us from actually.
Well, if I'm going to have that on, I'm going to need to change this over here.
As the anchor of our policies. So you have on the one hand flexibility, you have on the other hand a commitment to preserving favorable financing conditions and a clear link to the inflation outlook. This is clearly a monetary stance decision, and therefore one that requires the Governing Council to be involved. And given that we were a few days...
Actually, I just remove it for now.
Council meeting on monetary policy, number one, and that we were a few days away from having the provisions provided by ECB staff, we thought it would certainly be a better idea to...
Oh, that's interesting.
...analysis or the joint assessment that we want to conduct in order to determine what kind of increase, significant increase, as you rightly said, would be needed in order to respond to the commitment that we made. So do I have a number in mind to explain significant? The answer to that is no. And no for a very specific reason, is that we want to deliver on our commitment. That commitment made in December, as I said, was to preserve favorable financing conditions. Point number one. Point number two, we have full flexibility under PEP. That is, the cornerstone of PEP. But to actually assess jointly favorable financing conditions, determine their favorability in relation to the inflation outlook, we are not bound by any particular specific number. So what the Governing Council has decided...
So when I cleared through my workspace, it got rid of all of my robot stuff.
By total consensus, by the way. The Governing Council expects purchases under the PEP over the next quarter to be conducted at a significantly higher pace than during the first month of the year. So this is what has been decided.
I don't think I'll run them until Monday, but I guess we'll just be off for a little bit.
We're looking at a time horizon of a quarter, which conveniently coincides with the staff provisions that we receive on a quarterly basis, and which will enable us to actually identify whether the financing conditions have evolved, remain favorable, and actually help us to counter any downward pandemic effect on our inflation path. Now, I'm also happy to explain exactly what we mean by financing conditions and favorable financing conditions, because I know that this was a question that many of you had. So
I'll break in here to answer Mohammed's question. What are some advantages of looking at the DOM that the Vista heat map can't show? So when you're looking at the DOM, you see every order, whereas the Vista is kind of aggregating it for you. So there could be things that you will see on the DOM that you won't see over here. The thing that I find is very difficult to see on these heat maps is pulling. When order cancels and then it ticks up, you don't really see that over here. And that's really important.
At particular indicators. So let me take you through the holistic first. What we mean by holistic is that we cover the whole chain of transmission, from upstream stage, where you find the risk-free interest rate, where you find the sovereign yields, to the downstream.
Wait, is it going to let me download the whole thing?
Aspect of the credit terms. And that clearly includes a multiplicity.
No, it must be just the...
As well. And it has to do with a stage where monetary policy acts with the lag.
Yeah, it just gives me like a...
Upstream, essentially down to interest, to risk-free interest rate, sovereign yields. It's a segment that actually responds quite rapidly, which is measured on an ongoing basis, and where our monetary policy can be most efficient. But that's not enough. What's important is that actually financial institutions, those that provide financing to the economy, actually use those rates to determine the credit terms that they are then going to offer. So that upstream is clearly an important component, but it is not the component of our assessment of the financial.
Just gives me the editorial board thing.
The word holistic. We go from upstream to downstream. And the second word that I used, which is multifaceted, was also apparently a bit of a puzzle for some. Well, multifaceted, we organize information in a multidimensional form. That might be more convenient for some of you, where each indicator can be studied in its own right, and assessment is not based on an aggregated synthetic measures. So we don't operate mechanically. We look at all the indicators. We focus indeed on what is upstream, because that's where we can act, and that's where banks and providers of financing actually take their clue about the credit terms that they're going to offer. And it's also important to be multifaceted, because there are some downstream components that are not necessarily going to be influenced by upstream movement. Take, for instance, some fiscal measures that have rightly been decided, such as providing guarantees. If that was withdrawn, well, clearly it will have an impact on the downstream aspects of the indicators. In the same way, our TLTRO is also helping the downstream aspect of what we're looking at. So that's the reason why we look at financing conditions, looking at the upstream, the downstream, but looking at them in their own right, in a holistic way, all of it, the whole transmission chain, and each and every one of them, because they might respond differently depending on what is addressed to them. Now, the second question, of course, is how do we assess favorability? Well, if you look carefully at the introductory statement, we refer to a joint assessment of how financing conditions and our inflation outlook have evolved since last time we identified favorability and concluded with our assessment. And we look at the main drivers, of course. So, concerning the anchor that I have used as well last time we had the press conference, it's the inflation outlook. The assessment of the financing conditions, determination of how favorable they are, is going to be done in conjunction with the inflation outlook. And the compass that we have, another word that I used as well, are the financing conditions. So we use all that, and with a bit of good work, good analysis based on provisions and this joint assessment, our monetary policy will contribute to taking the economies across the bridge of the pandemic that we are suffering from and have been suffering from for the last year or so. Thank you.
Thank you, Madame Lagarde. And the next question goes to Alexander Weber of Bloomberg News. Alexander, please.
Good afternoon, President Lagarde. On the rise in bond yields, we've heard different views from governing council members in the past few weeks, and some said that it can be warranted if it reflects a better outlook. So which arguments were presented over the last few days, and what exactly led you to conclude that bond purchases must pick up in the coming quarter? And then also a second question on this change in language. Should market participants expect a change in the pace of PEP purchases only after governing council meetings? So do you think it's important to first build a consensus on that? Thank you.
Thank you very much. On your last point, as I said, quarterly basis is very convenient because it helps with having the right data, the right assessment, the provisions of our staff, sometimes checked by the national central banks as well twice a year. So we have fresh data, fresh information that is extremely useful in order to look at these two components that I have discussed. The anchor, inflation outlook, how does it evolve, how does it look like in the medium term, and the compass that we use, which are the financing conditions, which we committed to preserve as favorable in order to resist the downward impact of pandemic on our inflation path. So we're not monitoring on a weekly basis. I know that some of you listening are looking at weekly numbers. Fair enough. But the Governing Council is not micromanaging the operations. And on that vein, actually, I would like to tell you that when you look at this coming Monday, don't expect a huge, big rise, okay? Because the decision was taken today. We have still a good volume of redemptions this coming Monday. But I can also tell you that we're beginning to implement the decision that was taken today to significantly increase our purchases as of today. So the real pace on a weekly basis, which some of you are interested in, is not going to be visible or strongly visible this Monday. But again, we're looking at a time horizon which is longer than the next week. And, the Governing Council meets any time when it's needed. We're getting very close to the first anniversary of days when we were meeting almost on a daily basis. And that's when we started PEP. So if it is necessary, in order to respond with flexibility and to deliver on our commitment to preserve favorable financing condition, the Governing Council can always meet. But clearly the Executive Board can also use the flexibility that is embedded in the program in order to actually deliver on the decision that was taken today, which is to use flexibility in order to significantly increase our purchases. Thank you.
Thank you, Madame Lagarde. And the next question goes to Balazs Korani of Reuters. Balazs, please.
Good afternoon. Thanks for taking my questions. First one is about the goals of your decision today. I'm curious, is your aim to improve financing conditions compared to where they were, let's say, this morning, or to preserve the levels you have now? And if you want to improve them, what is the benchmark? Philip Lane put up some charts a couple of weeks
You think we'll be able to make a new all-time high today? I don't know.
in December. Is that your goal, to go back to the December level, or where
The read's going to be really
conditions level?
complicated today.
The second question is, did anybody at the table suggest, propose, or make the argument for increasing the total envelope for PEP? Thank you.
Well, let me remind you once again that when we assess favorable financing conditions, we do it with a series of indicators that go from upstream to downstream. I think that Philip actually, in his recent speech, very clearly indicated what was the composition of those upstream and downstream elements and what was the interconnection between the two and why the upstream actually mattered, without prejudice to us also looking very carefully at the downstream. So we do that on the one hand, and to assess favorability, we look on a quarterly basis at the inflation outlook. And on the basis of the commitment we made to preserve favorable financing conditions, that determines the decision that is made by the Governing Council. And on the occasion of this particular monetary policy decision, the Governing Council, by consensus at the table, decided that it was warranted to significantly increase purchases for the next quarter with a monthly reference. So, there is no reference to a particular day. There is no reference to any kind of yield curve control, if it is the question that you are angling to. We're not doing yield curve control. We are preserving favorable financing condition with a look at the inflation outlook that we have and how one contributes to reducing the downward impact of the pandemic on our inflation path. Thank you.
Thank you very much.
Total envelope.
Oh yeah. You asked about the envelope. Look, what we did with the envelope was quite spectacular, I would suggest. It was decided on March 18. It was subsequently increased by 600 billion euros in June. It was then again increased by 500.
So the headline I'm seeing coming out on Twitter on that is Lagarde says they're not doing yield curve control, and News Squawk retweeted that with a picture of a girl giving a big wink.
Favorable financing conditions. If I have not repeated it 10 times, I don't think I will have said it. So that's what we did. And for the moment, we probably have about 1 trillion euros left in the envelope. And it's very clear also in the introductory statement.
Zero Hedges headline is actually it is.
Conditions. If we need less than the whole envelope, we will not use the whole envelope. If equally to preserve favorable financing conditions, we need to recalibrate.
Show me the envelope with 1 trillion.
So again, it's flexibility in the monthly purchases under the quarterly decision that is made by the Governing Council, and its flexibility as to how we use the overall envelope during the life of PEP. Thank you.
Thank you. And the next question goes to Eric Albert of Le Monde. Eric, please.
Hello, thank you very much for having me. A couple of questions first on the headline inflation that is likely to increase, as you said. The problem, of course, is you justify your intervention by saying you needed to increase inflation in the past. If headline inflation gets to 2%, what arguments are you going to use to justify your intervention? And one other question, if I can, on climate change. You had a paraglider on your roof yesterday. You debated the issue, I think, a few weeks ago, and the leaks were that the ECB intervention might not extend to choosing bond buying according to the CO2 emission of companies. Is that correct, or will you keep the market neutrality mantra?
Well, thank you so much for the two questions. On the first one, let me make a few comments about inflation. Because if you look at the staff provisions that will be released later this afternoon, you will see that our inflation forecast is of 1.5 for this year, and then moves down to 1.2 and then 1.1 and finishes in 2023, which is our medium-term horizon, at 1.4. It is possible that this year, particularly at the end of 2021, inflation actually hits 2%. But I will tell you something. We will see through that for a very clear reason. And that is that inflation will most likely go up, possibly to 2%, because of some technical and temporary reasons. Let me just mention a few, and we can go through the list. But it's number one, the VAT, the German VAT return, which had an impact, an upward pressure on prices. It is the significant modification of the weighing in the HICP balance to adjust to the change of consumer behavior and consequences that it has in 21. It has to do with some idiosyncratic factors having to do with, I think, Italy and France that have extended into 21 some of the sales, particularly in the clothing industry. And it has to do, of course, with the increase in prices in the oil segment. So for all these reasons that are, we believe, temporary, technical, as I have just tried to explain, we will see through that. And it is important for us to actually look at what happens next and to look at the medium-term inflation outlook. And there, we are clearly seeing subdued inflation. Why is that? Well, because demand, subdued demand. Second, because of the slack in the economy that will gradually...
They are all trying really hard to play down the inflationary risk, right?
Which is large and has a significant impact. Wage pressure. There is clearly limited pressure up on wages, and also the impact on the euro appreciation. So for all these reasons, we believe that while it has increased a little bit in the first 2 years, on the third year, we are still at 1.4, which is far away from our inflation path pre-pandemic, and of course, far away from our aim, which is close to but below 2%. So that's what I really wanted to explain in relation to inflation. That's how we see it, and clearly inflation, our inflation aim, and our inflation path pre-pandemic remain two very important anchor of the monetary policy decisions that we will make. Thank you. Oh no, question about climate. So I think that it is almost unanimous within the Governing Council that climate imperatives are nothing less than imperatives. And I have said repeatedly that it is the biggest challenge that is addressed to us. Hence, in my view, any institution, whatever its mandate, whatever its remit, has to question itself and wonder what can be done. Now, obviously, an independent central bank has to deliver on its mandate. And we need to do that, and we need to look at what we can do in compliance and in respect of our mandate, without overinterpreting the mandate, using this primary objective, which in my view justifies fully that climate change matters be actually taken into account for various reasons. The integrity of prices on the market, a good risk management, appropriate supervision that falls under the responsibility of Andrea and Ria. But on all those accounts, we have to explore what we can do, how efficient we can be in doing so. And to your very clear question, it will apply, of course, to how we value collaterals. It will apply to how we value corporate bonds, with proper risks being taken into account. Now, at this point in time, the main responsibility, in my view, in the view of the Governing Council, lies first and foremost with governments, and governments at the European level, and Europe is delivering in that respect, but with governments in the various member states. And there will be a staged approach where clearly information, disclosure, investment will all be required in order to address the climate change issue. So while we are, on the same page in many ways with some of the civil society organizations, we cannot help but regretting enormously the approach, the conduct that was adopted, which clearly by paragliding on the roof of the ECB is exposing people's health, life possibly, and we don't think that this is the necessary way to conduct a dialogue. But we will definitely continue this dialogue.
Thank you, Madame Lagarde. And the next question goes to Martin Arnold of the Financial Times. Martin, please.
Hello, Madame Lagarde. Couple of questions for you. Thank you for letting me ask them. Firstly, your colleague Fabio Panetta cited the Daft Punk song "Harder, Faster, Better, Stronger" for the ECB to do more. Do you think that by accelerating the pace of your bond purchases, as you promised to do, that satisfies?
So some strange things going on in the ES right now.
Whether your latest economic forecasts include the effect of the 1.9 trillion.
Do you see all that? Those big orders moving around?
Just being voted through in the US Congress. Thank you very much.
Thank you, Mr. Arnold. Those are two questions, actually. First of all, I'm delighted that my colleague Fabio Panetta decided to quote a French group. He could have borrowed from Baron Coubertin, who used some of that as well. And, I go back again to the introductory statement and will be happy to read it again, although you have it in front of you, I'm sure. But when we say, the Governing Council expects purchases under the PEP over the next quarter to be conducted at a significantly higher pace than during the first months of this year. And when I tell you that we are moving into action as early as tomorrow, I think that fits the bill. Now, you will find some that will want a little more, a little less, a little this, a little that. Suffice to say that there was consensus at the table of the Governing Council today to do exactly that. Conduct a significantly higher pace of purchases during the first month of this, during the next quarter, as compared with the first 3 months of this year. Now, very good question on the issue of the massive fiscal stimulus that is likely to be signed into law probably today, and will give, knowing Treasury head Yellen, the efficiency that she has, I'm sure that there will be immediate implementation. The answer to your question is no, because of rules that many of you are familiar with. Until a piece of legislation is voted, we cannot take that into account. So, it was voted yesterday. It will be moving into law tomorrow. Hence, it is not embedded in our provision. But we do, and actually the introductory statement makes reference to the external demand, to the impact that a massive fiscal stimulus will have on our pace of growth, that it will have on trade, of course. So, we believe that the Biden plan is actually...
On my dom is down. Okay, I don't know what you mean.
because
There's a 250 lot
domestic measures that will
on both sides of the market,
domestic market.
ticking up and down.
An external demand that is addressed to the euro area and to other countries, of course, will generate probably.
It's kind of weird,
And will have an impact on our growth.
the amount that it's moving.
And that will indeed be reflected in 3 months' time when we produce our June previsions. One thing that I will say is that the big difference, if you will, between the Biden stimulus, which, as I said, debated, voted by the two houses, signed into law, checks in the mail, and our massive fiscal stimulus here in Europe, is that there is a bit.
That's why you're hearing that clicking sound.
And the next generation EU, as we say in the introductory statement, is critical.
Yeah, I agree. We should turn it off for now.
Stimulate the European economies from a fiscal point of view, and is also terribly important for two other reasons. One, because it needs to address the issue of heterogeneity between countries and between sectors, and it needs to focus on what will be productive.
It could just be a spreading algorithm.
Our economies and our Europe into the future with the focus.
These sorts of things are common to the treasuries.
But there is a time lag between the two. Let's face
They
it.
usually don't trigger it.
A bit of yield increase. The trade movement are going to come, but our own fiscal measures are not kicking in yet. And we need that. We need that. Thank you.
Thank you. And the next question is going to Jan Malin of Handelsblatt. Jan, please.
Madame Lagarde, you had said that you have not taken the Biden stimulus into account, but could you maybe elaborate a bit on how it has already resulted in inflation expectations rising significantly in the U.S.? Could you maybe say something how this will affect the medium term, this global developments affect the medium outlook for inflation in the euro area? And you have kept your inflation projection for 2023 at 1.4%, so very much below the target for the medium term. So why actually didn't you do more from a monetary policy perspective? Thank you.
To the risk of boring all of you, I think that when the Governing Council, by full consensus, decides that purchases under the PEP over the next quarters will be conducted at a significantly higher pace than during the first months of this year, it is not an insignificant commitment that they're making. And I remind you that it comes on the top of the monthly 20 billion euros that are purchased under the APP. So I think that there is a serious taking into consideration of the undesirable yield increase that we are seeing, that we have seen in the last few weeks, portion of which certainly is attributable to the inflation expectations and the GDP growth expectations in the United States. That's to my point of the time lag. I hope we can move fast on the fiscal front here in the euro area. Now, obviously, staff here at the ECB has been very diligent looking at the Biden plan and trying to assess on a very preliminary basis what the impact will be on both growth through the trade channel in particular, and also
I feel sleepy again. Today is rollover.
Inflation outlook. And there will be some impact. It's pretty clear that will be.
I've seen some news that Twitter has banned a number of important Bitcoin accounts, including the accounts of the Binance, Huobi, and OKEX accounts.
Into law of what has been voted yesterday by the House of Representatives. Thank you.
Thank you. And the next question goes to Domenico Conti of the Italian newswire ANSA. Domenico, please.
Hello, thank you very much for this occasion. Madame Lagarde, one question that I have would be about, I know that you've been over the how to preserve financial conditions Just about the purchases that you are intending to make in the coming quarter, are you targeting a particular segment of the yield curve? I'm asking this in the context of this sharp rise in sovereign yields in the longer part of the curve that we've seen globally. And if I may, one second question is about the ongoing discussion on setting a European bad bank or a network of national asset management companies. Can you give us a hint of what this discussion is leading to, whether there have been some developments? Thank you very much.
On your first point, the answer is pretty easy. No, we are not focusing on any particular segment of the yield curve. We want to look at the entire yield curve. And well, it comes to mind that the 10 years sovereign yield is one that is often
Is gold dropping on this speech or something else?
Evolved in a slightly different way depending on whether you're.
I'm not sure, to be honest.
Or way beyond, including.
The treasuries have dropped, and that might be what's pushing it.
Holistic. I'm not going to take you through that again. I hope it's what we mean by holistic is clear enough. What we mean by multifaceted is clear enough as well. And I know those are not usual words for this particular kind of press conference, but never mind. We can always expand our vocabulary as long as we know what's behind it. So the entire yield curve. On the on the European asset management, the ECB is continuously monitoring the impact of COVID-19 crisis on banks. A large-scale, system-wise increase in NPLs would require a comprehensive approach at the national and EU levels. Now, based on the development and the monitoring, different policy options are being considered and could be further explored. And certainly at the ECB, we have taken note of the Commission proposal to asset management companies that would operate at the national level. And we agree that this is a useful way to manage a systemic NPL problem. As you know, also, my colleague Andrea Enria has had in mind a more pan-European approach. This might come along later, but I think the key urgency is to make sure that there are mechanisms in place that can deal with the risk that bears on banks. Thank you.
Thank you. And the next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you. Thank you very much. Madame Lagarde, I have two questions as well. One would be on the still high euro exchange rate, because clearly, despite all the easing measures, the euro is still very close to that 120 benchmark towards the dollar. How much is that a concern for you and your inflation outlook? And the second question would be more in your capacity as like a global leader. Currently, there's discussion about easing or changing the Stability and Growth Pact also in response to that unprecedented crisis and the unprecedented debt levels. Would you think that's a good idea?
Okay, on your first question concerning the appreciation or the level of the euro at the moment, I have said that before. I'll repeat it again. We're not targeting any particular exchange rate for the euro, but equally, we monitor very carefully the development of rate, because clearly they have an impact on economic activity and the outlook for price stability in the euro area. It has been quite volatile lately. And we do monitor carefully. I think in the current environment, the ECB will continue to monitor developments in the exchange rate, but we don't focus on the exchange rate as such. We focus on the impact that it has on prices and the implication that it has for the medium-term inflation outlook. Your second question on the Stability and Growth Pact. First of all, I would like to observe that although it's in the remit of the Commission and the Council, the decision to extend or to activate the escape clause, to keep it alive, if you will. I never know whether it's activate or deactivate, but to keep it in place. In other words, escape is allowed, and some of the current constraints under the current SGPs are waived. Their decision to extend it until such time when the European economies are back to pre-COVID-19 is, in our view, the right approach. We are not decision makers in that. We are consulted, and this is certainly the position that we would take. And to the extent that under their winter provisions, the Commission foresee the return to pre-COVID-19 mid-2022, this is actually...
now it tells me.
keep that waiver. And
Ninja Trader just giving me that, hey, you need to roll over today.
Is that by the time when the escape clause is deactivated and constraints return, SGPs will have been revisited and will have been improved in order for it to be more simple, more focused on...
Could you put the NQ on screen? No.
And also, indeed...
I don't know, man.
Fiscal...
The NQ would be very distracting, and I don't have very much room.
Look at what criterias, what measurements are used. You know, it was decided back in the 1990s. And the situation has changed significantly since those days. So
Y'all want to gamble on the NQ, that's great, but I'm not interested.
In order to give both stability and support solid, sustainable and stable growth going forward. Thank you.
Thank you, Madame Lagarde. This brings us to the end of today's press conference. Thank you very much for joining. We will see you again on the 22nd of April.
Finally, I can turn that shit off. Good grief. Okay, so this is unusual, guys. To see an order of 2,000 lots moving around like that, I've never seen anything even close to that. I've never seen anything even close to that. So I'm not quite sure what to make of it. Yeah, I know that the March contract doesn't have as much volume. Of course, it's not going to before the open, right? So what we should expect to see is a substantial increase in volume in the June contracts here as we've opened. And then throughout the day, it will switch over. But, the way that it's trading right now doesn't look like a ton of volume over there, is it? Especially not in the micros. So, the expiration is usually not good for me. So I may just kind of chill. You think only Monday will have more volume? Well, you think that June will have more... You don't think that June will have more volume tomorrow? It does take a few days for it to roll over. But look at the E-mini here. Well, we can switch, I guess. Either way, I don't know if I'm going to be doing too much trading, to be honest with you. At least over there, maybe in the treasury. Trading terminates on the Friday, you're correct. But the Thursday is considered the rollover day when everybody rolls their contracts over. Or at least when your software is going to tell you to do it, right? Like even the Ninja Trader software is telling you to roll over right now. Clearly, not everybody has done so, though. Well, if we're not going to trade it, we could do this. So you can definitely see there's definitely a lot more out there in the ES hundreds. Why is there a 10-point difference? Because that's how far they expect it to move in June? I mean, there's going to be a difference between two. So if this one, let's see here, what do we call this? If this one is lower than this one, then we call that backwardation, right? They're moving up. Well, you definitely can't make much of a read from the volume over here compared to here, but you could still trade it. It's the interest that could be. Well, the E-mini is trying to push higher. New all-time high this week. I think that there's a really good chance, yeah. I mean, we got Friday. I don't think that it will be before Friday, but next week, probably. Well, that's not particularly good. Looks like there is some absorption there, though. E-mini testing both sides of this very tight range. They didn't find the $1 trillion envelope yet. Well, that pull in there at 18 is concerning. I don't think this one's going to work out. So we can see there in the 5 them hitting into an iceberg on the offer side. Something changed there, yeah. Well, E-mini flipped back up really quickly. Hmm. $14.03. A little choppy. Yeah, it's choppy. Kind of a lot like yesterday, isn't it? But more so choppy. Yeah, they had no trouble taking that. Wonder if this bearish action has anything to do with the treasury auction. Like, there's a big iceberg at 25. Ouch. Very quick push down on break of the low end of the range. They didn't beat out like the last pivots or anything, but that was a pretty aggressive move. Just come the way it came in all at once. Okay. Well, that hurt. Ouch, and they gave me the slippage too. Well, the way that the treasuries are trading down, man. Look at this. Can I even get filled on offer? Let's see. They seem to be reacting to the interest rates. Mm-hmm. That's weird. All right, fine. You can see there in MES, there's not really a whole lot of people trading it in the new contract. Man, that was awful. Hmm. Hmm. That treasury is pushing down. I was getting the vibe too, wanted to give him another inch. No. We don't just ban people just because they're so lame, right? If they're doing anything that's like that sort of a thing. It looks to me like I'm not... Well, over in the Treasury, I think I got something going, but this action over in ES, it looks pretty random to me. Like, it looks pretty random, but they are struggling, aren't they? Yeah, those bids in the 10-year just aren't holding at all, are they? The E-mini is going nowhere. You know what was funny about that Salim thing was that it came in and I had a loser, which is okay. And he was immediately like, oh, why did that one work? What did you do that one? Now, what's wrong with you now? Okay, one after I had a streak of 6 yesterday, I would, if I came in and had another streak of 6 today, I would be like, what the fuck is going on? Dude, trading's just not for you, man. Just go do something else, because you clearly don't have the mindset for it if that's the way that you think. Salim doesn't care. Dude doesn't trade. I think he was trading. I remember he said he tried and he was doing an account and then he blew it. All it takes is one angry trade, yeah. By the way, I need to do it like that, just in case. I mean, it to me, it looks like the E-mini wants to push up, but then when the E-mini starts pushing up, the treasuries start pushing down and kind of holds it back. We should read the Texas speech.
Winston's mom says 61 watching now. Please take a quick second to hit the like button. Thanks. This helps speculators track his channel numbers.
It helps the channel is what it does. You know what's fun? The other funny thing about the trolls is that, like, look at how many more viewers we're getting because of it. Because 60 viewers is a bit above average, isn't it? Apple fading a little down. How about GameStop? Should we pull that stuff up? I don't know, man. I keep trying to, like, I want to reduce the number of things that I have, but then there's stuff I want to look at. And, like, but there's so many things that, like, I want to look at it, but I don't really actually look at it. Like yesterday, my eyes were all on the DOM. I wasn't looking at any of the other stuff. You deleted it from your watch? Man, yesterday was wild, though. So somebody was showing their book map for it in the Discord, and it was like this: the stock got halt. There was a push down, and it halted the stock, and then ever after that, the liquidity was just done. It was just completely gone. T3 said the trade is done. I mean, I think so too. Okay, so I gotta ask, what the hell is the point of the spreading algo? Like, is some asshole really sitting there watching his 200 contract offers and bids bounce around 8 ticks away from the inside all day, or what? Yeah, I think so, actually. It could be somebody waiting in line, right? Like, maybe if price just happens to move 8 ticks down, he'll take the fill and he'll be happy. Otherwise, it chases. Right? That's the only logic I can think of, at least, for why it would behave like that. With that accent, I imagine you as a Bavarian. Oh my gosh. So I saw this video on TikTok yesterday that I saw was so incredibly interesting. And what they were talking about was, apparently back in the Middle Ages, brewing beer was a woman thing. Like, you go to the market and it was always women selling beer. And then during, like, the witch trials sort of time period, that was when men basically took over their profession. And what happened was they would claim that the women brewing beer were actually brewing witch's potion or whatever it was. And that the hat was even a part of the beer brewing thing, right? So it was basically like men came in. The witch trials was partly about men taking over the beer industry from women. It's like, that was so incredibly interesting. What did you do at work today, hon? Just watched my limo orders bounce around all day, jerked off a few times, good old all overall. Yeah, well, so if it is something like that, the way that I at least that I saw it work is you'll have an algorithm that auto stacks and auto pulls. So if we move up, it'll move that big order up and automatically. But then they're also sitting there and on the inside and saying, okay, how many do I actually want? And they're kind of just nibbling here and there, right? And those orders on the outside are like, well, if it moves that fast, I definitely want to take it. because I think that it will mean revert, or the algorithm thinks that it will mean revert at least. Otherwise, you know what I mean? So when I see that there, that I don't necessarily read that as like, I think that the market's going to specifically do something with that order. But what I am thinking is somebody's doing something. To me, it's just the indication of the presence of a large trader. But he's probably doing stuff on the inside, and it would be impossible for us to see what he's actually doing. I think it's just mandatory liquidity some market maker has to offer in rollover. Now there's no market maker obligations anymore. I think Stickball is probably right. At least I've never seen anything to suggest that that's still a thing in futures markets. Otherwise, some of those bids and offers wouldn't pull away so easily. By the way, how many did I take over here? Okay. MES definitely has market making programs. Yeah. Well, the thing that I find interesting is that some of my robots work better on MES than they do ES. So, and this one in particular runs on this signal that I really that appears to have a really high probability on it. So it seems to me that edge has been arbitraged out on ES, but not MES yet. But I don't think I have the whole edge. There's something I'm missing on it because it performs great on the back test. It doesn't perform as well as the back test, but it's close to break even. And I think that if I include level 2 and things like that and a couple of filters, that we should be able to get it to a really high win rate, but just not happening. How long? Well, so when I ran it, I was just running it on 2 years of data because it's a tick replay indicator. So it's really expensive to test it, right? I mean, I would always like to test it as far back as I can, but I don't have it on today, though. I'm just going to leave them off. Same with Gabby, because Gabby will get screwed up by the new contract for sure, so... Oh, how long have I been forward testing it? Well, I don't think that. I mean, I've been doing it for a couple of weeks now. I think it's on its third week, but I don't think I could say that it's been properly forward tested because what I've been doing is I've been changing something about it and then letting it run for a day and see what that changes. You get what I mean? So I would consider J still in development. Because what I did with J was I went and I found a technical signal that from order flow that appears to be highly predictive. But I really wanted to use that as a base to try and sort out an edge from just the level 2 imbalance itself. And so that part of it is definitely still in development. So even though I've been running it for a few weeks, I would say that it hasn't been forward tested, you know? Man, that treasury came back down so quickly, right? Because they were just at 19. And it just crashed back down so easily. Well... I'm going to move my stop. I'm going to put a really close trailing stop. Yep, okay, it took me out. So that puts me positive on the E-mini. Okay. And then there's the treasury. I don't want to take that one there anymore. I mean, I don't think that it is Gary. I think that it's still sleep. But it's I to be honest, my approach to the stream in that respect has changed a lot. Right? So my approach has become much more secretive, right? I still want to have the community bit, and I still want to record it and to be able to see what I'm doing. But you noticed I don't really give very much explanation behind why I'm doing what I'm doing anymore. And that is because I've found some empirical evidence that suggests that that would be more effective. That's what I told you from the beginning. Well, you know, the thing is I think I always kind of said, yeah, well, edges are competitive, and if you have a certain edge, you don't want it to be arbitrage away. But we always said, well, this stream doesn't matter much, and this, that, and the other thing, right? The problem was that when I actually went and did when I found out, you know, how to determine, like, quantify your edge, and I went and I did the math, all of a sudden it was like, holy crap, you literally can't tell anyone. like you can be like you and your few friends, and maybe if each one of you only trade max 100 contracts, otherwise you're kind of pushing it. And then I looked at it, I'm like, oh, I get 50 viewers a day. I can't actually share it with them, can I? No. So I just stopped telling you guys anything. I mean, all of the information about how I came into it and the ideas and principles, if you've been watching every day, then I shared that stuff with you, but I had not sharing like the very specifics of how I ended up using it. And even then, like, I've been using the principles of it and everything, but there's a lot of things about the way this market has been working and everything that kind of makes me wonder, like, yesterday it worked too well. I don't know how I did so well yesterday. Does your automated trading net you some money in the long run? Well, so it looks like that Gabby could be. So Gabby's still in testing. I think that what we're going to do on Gabby is we'll turn her back on Monday and let her run for 2 weeks. But the preliminary results that I had from her during like the base testing period, like when I thought that I was going to optimize her and stuff, have been so good that I don't think that I even need to do that stuff. So I think that we'll run her. It appears to me that Brandon is also profitable in the long run, but his performance is a little too inconsistent to put it on a combine or anything, or even trade it myself. So I don't know. Well, that was a pretty good move up that we had. I mean, it was a 10-point run. Markets calmed down quite a bit for sure. Oh. Coming all the way back again, huh? Yeah, if someone is determined enough, they can watch all the old VODs and get some really good ideas. Yeah, for sure. Plus, I mean, this has never been about trying to teach people my edge, right? So it's been more about my own development and building a community. And I feel like we've done that. I think that the community that we've got here on the channel is, larger and more successful than I ever thought. And I'm pretty happy with the way that the live stream is now. I want the channel itself to get larger, but interestingly enough, growth in the channel overall doesn't result in growth in the live stream, which I guess is good. But Seth, so many retail traders need someone to tell them what to do, right? Oh my gosh. I saw this video yesterday from this guy, and he's like, is it just me, or people, new traders, they don't want somebody to show them some FOMO trade that they missed out on, or, try and show them your Lambos or anything. They just want tips on which stocks to trade and why you're getting into it. And I'm like, no, that's not what you want at all. No. You need to develop an edge. Your edge can't be I follow X guy on TikTok. Yeah, I come here for both the community and your commentary. I know. They need someone to blame that isn't themselves, maybe. Well, so I was thinking about this yesterday. Because we know there's been studies that have shown that people have a tendency to blame themselves for their successes and blame others for their failures, right? And we know how that applies in trading. But I kind of wonder, how long can you lose? How long can you do this before you start to say, well, it has to be me? Because one of the things that I've noticed so often is I see a lot of traders that blame themselves for their trading when the reality is that their edge just isn't any good, And so I'm wondering, does it really actually turn into that people take the attitude of blaming themselves for everything when it's not really the case, because they've been going through so long. So like at the first they blame everybody else, but then they keep at it. So then they say, oh, it has to be me. Right? When as far as I can tell, the real issue is how do you empirically prove that you have an edge? Right? Because we'd always think, well, one way that you could empirically prove that you have an edge is to trade it and have the results and show it to everybody, right? But if the market can misbehave and make the edge perform poorly, if you can misbehave and make the edge perform poorly, then is performance in and of itself enough empirical evidence to prove the efficacy of a strategy? Well, it's definitely enough to disprove the efficacy of a strategy, but I have found that it doesn't prove that a strategy works, because so many things I've seen people say, oh, I've been done well with this or shown me performance, and then like seen it stop working, right? So then how do you empirically prove that the strategy has some efficacy? Well, that's when I think you get into the scholarly literature and the math in market microstructure stuff, because those guys, they've been able to say, okay, here is a theory about how the market works, and here is a mathematical model to describe what we should see in the market based off of that theory, and here is a data set that exhibits the properties that we've predicted. And then if you can build an edge off of that, then you have something, right? You have a real edge that you should be able to quantify. Yeah, same with real life. A lot of people think the outcome is tied to whether the decision they made was good or bad. Yeah, when it's a lot of outcomes are really just random. I feel you. Okay, that was a strong take at 16. They didn't stand in front of that at all. Brandon Williamson says, why do you want to prove your edge to anyone? If you've got edge, why would you want to tell anyone? Well, that's kind of the point. Isn't that what I was saying? So if you're working with a friend, so like people that work with me, for instance, and they want to help out, and they say, I think X thing works. I'm not going to believe that X thing works until I've seen empirical evidence that suggests that it does. And most often, I go out and try to produce that empirical evidence myself through backtesting. And it almost always shows that it doesn't work, right? Okay, so then some people say, well, you can't just backtest it. Okay, fair enough. Then you have to produce the results. And most of these people can't. Oh man, look at that. He really wants 15 to trade, huh? Look at that, stack at 15.5. Good deal. But then there's this other side to it, which is that, yeah, why, I mean, I think that there's reason to share edge. So let me back up and try and approach this from a different direction, okay? Trading is difficult. Finding edge is difficult, especially in this market. And as time goes on, it will become more and more difficult, and the things that you will need to do to continue to be successful will become more and more sophisticated. As such, it makes sense to work with other people. And this channel can be an effective way to do that, because you can find people that are serious about trading and are serious about, looking at the data and, aren't just chasing after every stupid trend idea that's popular on Reddit or every technical indicator that's come along that they've ever heard of, right? So in private, with people that you meet on the channel or with me, you can work on edges. You can share pieces of information that you've found, and maybe the other person might have the other piece of information that you need to make a working system, right? But we don't talk about it where everybody can see. We don't want the whole world to know what the edge is, because if too many contracts trade it, it will eliminate the edge. Yeah? Fair? Is that fair enough? You just said there's a limited number of winning contracts that get filled out. Why would you share that? Well, if you already have a fully working system, I don't think that you would. unless you were just being nice and you knew that there was still a significant amount of what is the word? Margin or whatever. You know, there's still some edge that somebody else that you like could take advantage of it too. But I would, you know, at the same time, I would be telling them, don't share this with anybody else. You know what I mean? But if you had a complete system, then probably I wouldn't share it, and probably you shouldn't. But the reality is that most people don't have a complete system that works for them all the time and is just absolutely amazing, you know? Most people have bits and pieces here and there that work in certain kinds of situations, right? They have to be smart to polish it. Yeah, you're going to need people to help you refine the system. That's why, for instance, I put my indicators out. I put the indicators out because some of the things that they're doing are really hard to backtest, like the whole level 2 thing. Like here I'm coming in and I'm changing things a little bit every day to try and find the best setup for how to filter the level 2, right? Well, if other people download it and they're doing the same thing and we all share results, we're going to find something a lot faster, right? Okay, cool. I got that one. Okay, so I'm pretty satisfied with what I got there. Results come from within. No. But you have to develop them. You don't share anything with them. I'm just telling you. If you're gonna do it all yourself, you must be some genius. Because I wouldn't have found the things that I have without help from people in this channel, right? And that's why when I'm talking in private message with longtime regulars that have been contributing and stuff, I share information with them. I tell them, you know, they ask questions and I've backtested that, or I have a piece of data, I tell them. Yeah, don't you hate it when you share your edge and it gets turned into a robot? Well, I'm not trading it, so I don't think that anybody's trading it. From me, you moron. Help from me, you moron. So I'm still not sure who Brandon is. If Brandon is Salim, you're better off without Salim's help because he doesn't have any profitability or any edge whatsoever. If it's Gary Rich, the issue with Rich is that the way that he makes his money from options, and I'm sure, I mean, I have some idea of how he does it, and I'm sure that he could teach you a lot about how to do it, but you would have to have a certain amount of capital to start with. No, it is Salim. Yeah, well, why would anybody want your help, Salim? You're an idiot that doesn't know shit about what he's talking about. I did. I'm just sitting here like, why would anybody listen to a person who absolutely everything that they've said is like wrong and not helpful and stupid? Like, since somebody that clearly isn't even trading. Is there anyone in this channel or Discord that is trading for a living? Well, so I guess you have to define what is trading for a living, right? So I can tell you that both Ace and Uzi have both, they don't have day jobs, and they have shown to me in the past considerable winnings. And I don't know how well they've been doing over the past month because I don't ask them to show me every month. But they're people that I would consider trade for a living. I don't think either of them are full-time, right? I think that most people in futures, they trade like the first 2 or 3 hours of the E-mini open, and then you're done. But sometimes from getting the change out of the couch, I do kind of, I'm like a 50-50. There you go. You see, so here's the thing. I guess the real question is, should my goal be to completely make my income from day trading? And to that, my response is no. I think that for a retail trader, you should always be having another form of income. And if you are trading futures and you want to make the jump into becoming a professional, then what you should be looking to do is be a CTA, right? Which is not what we're doing, right? Maybe it should be. Maybe we should be going and being CTAs, but no, day trading is not consistent income, even if you're really good. And the degree of success that a retail trader can realistically have is, I mean, I don't know if the money is really worth it compared to how much effort you put into it, right? Now, there are other kinds of strategies that maybe you can, like some of these options guys. The issue again is that the sorts of strategies where I think that you really could make it like your full-time job, you would need to have a pretty decent amount of capital to start with. The CTA road is what I'm doing? Okay. What's the purpose of trading if you have another job? Your day would be 12 hours of work at least, when trading is supposed to bring more freedom? You enjoy it. I mean, that's what it is for me, right? I mean, I've made some money from trading some years. Well, some months, let's say. So I lost money last year, and the years before that, I didn't really trade like live account for the whole year. But studying for the Series 3 right now. That's interesting. But no, I do it because I enjoy it and I want to get good at it. No, I'm not pushing it with him. I can talk to whoever I want. I can ignore whoever I want. I can ban whoever I want. I could ban any one of you for any reason that I possibly cared for. I can ban you just because I don't like you. I could ban you because you sneezed. I wouldn't do that. But then here is the other side of it is that he's just a bad troll, right? He comes in, he claims that he, like, it's funny because just then he was coming like, oh, I know stuff, I can help you. No, you can't. You don't know jack shit. He doesn't know jack shit. He's not even actually trading. And all of the things that he says shows that he doesn't know what he's doing. I don't know why he chose to come here and pick me to harass. But he's a pretty bad and ineffective troll. He seems to me to have some sort of psychopathy personality disorder, because he seems to lack the ability to even look at what it is that we're doing and what it is that I'm doing and turn that into an effective trolling strategy, Like, he comes in and he's like, okay, the way that I can mess around with Seth is I can try and make him afraid that people don't like his stream, or I can try and talk into his head about that one loser was a big deal. And anybody that's been watching the stream for more than a day would know that kind of shit doesn't bother me in the least. So it's that kind of lack of self-awareness and inability to put yourself in another person's mind to even like troll them effectively shows some degree of psychopathy. There you go. You see why you care about people watching the stream. Well, I mean, I like to have success with the stream, but isn't the point of the stream isn't to get the maximum number of people watching. You see? He just doesn't even understand. I don't think that he has the capacity to even understand it, because he can't put himself in another person's mind. Am I crazy? Tell me, Uzi. Do you get, or Ace and Uzi? Do you get what I'm stepping on here? Like, do you see that? Where it's like the attacks that he chooses to use are like attacks that you would expect to be ineffective against this channel. You know what I mean? Like if I was another channel, many other people that do this, where the number that I put on the thumbnail every day has a high degree of predictability as to how successful the channel is in the future, and how many people watch the channel has a high degree of, is a significant factor into how successful the channel is. Then knowing that you did poorly that day, or that somebody doesn't like the channel, would be like a big deal for you, right? But if the point is to build a community and to get better at trading, then those things don't really matter, do they? Because he says, yeah, his personal attacks are too much. Well, it's just like every time he comes in with the personal attacks, I laugh. Like I try to ignore it, but they're just so funny and ridiculous. Just can't imagine what kind of state of mind a person could be in to want to come in and say that kind of stuff. You know what I mean? Well, Ace's wife has a job, but this is an interesting question. How well off would you be if it was just your trading that you were living off of? I don't know. I've only just heard of this Salim guy. Stickball, then maybe I've been doing a better job of ignoring him than I thought. Because we've had to come in and ban him 10 times pretty much every day for the last 2 weeks. If you pressure yourself to get a paycheck from trading, you'll reach ruin significantly quicker. Yeah, probably. And that's where I get like Gabby, for instance. So I think that does he really? Wait, Steve. He thinks he gives trades with Matt Grief as well. Does he really? Wait, me and Matt, we should coordinate our trade craft and so forth so that we can take, maybe deal with them better. Mentally, when you only care about making good trades, not about the money, it makes things so much better. And Steve says yes. Okay. Well, that's funny. Yeah, I mean, I don't watch his streams per se, but sometimes when he makes videos and stuff, I'll watch him, and he seems like a really good guy. I don't really think that. I mean, he trades price action, and I just don't believe in that stuff. I mean, you know, but as a person, he seems like a great guy. Matt puts up with him because the comments add to YouTube points or something like that. Well, he comes in and he gives me the downvotes, and it does help the channel, yeah, but... Seth, what I meant to say is if you worry about the money, it is a stone around your neck. If you just concentrate on making a good trade, the money will flow. It could be. I tell you what, when I'm doing poorly, that's what I start thinking about. And then I'm be like, nah, I want to make this back. And, you know, okay, so we lost, but we can at least undo this trade or this, you know? And it doesn't help, does it? Anyways, I was saying something about Gabby. What was I saying? Oh, yeah. So with Gabby, I don't think that you can trade very many contracts with it. So when I look at like how much I can realistically make from Gabby, I think it's worth it. And I'm going to try and do it. But I couldn't make a living off of Gabby. Yes, but you have opponents kicking the ball on the opposite direction too. Throwing a football, kicking a soccer ball, or dribbling a basketball are all easier than making money trading. Well, let's put it this way. If you're physically gifted, what you've got to go through to become the best at basketball is very, very different from what you've got to go through to become the best at trading, right? I think that a better, more applicable comparison would be chess. I really liked the Netflix series Queen's Gambit because it showed how she developed herself as a chess player, right? That was the whole, well, it wasn't the whole story because a significant portion of the story was her development as a person and dealing with some of the problems that she had in her life, right? But there was a significant portion of this story that talked about how she studied, that they would go and they would get books and they would go through all of the scenarios in the books, and she would work with individual people to study. And it was a situation where I guess she's just lucky people like her or whatever, but somebody would say, I'm a pretty good chess player, you're better than me, and they help that person become better. And it was in the very end of the series you show, because they had all of these people watching her match and overnight going through the scenarios that they had already gamed out for her and giving her tips on it, right? That's what we're trying to do. That's what we're trying to develop here. And it shows you how to find edge, really. It's a much better analogy. But anyways. Are we at an all-time high in ES? I don't think so. Hold on. I think when I was looking at it this morning, it was pretty unlikely that we would break all-time high. Yeah. To break all-time high in the June contract, we would need to be above 3960. So we're still a good 40 points away. Unless you want to have a comparable, capital reserves. You'll never be able to compete on the same level if you want to continue the sports metaphor. Us trading is like Mike Tyson boxing a 6-year-old. Yeah, no, I think an even better example of it, one that people will understand, is like trying to compete with professionals is like saying, I'm going to win the Indy 500, or, I'm going to win the F1 racing circuit with my Honda Civic, No. Hold on a second here. Oh, okay. No big deal. Chessmaster Levy Rosman went from an average 70,000 views a day on his Gotham Chess Twitch channel to 500,000 shortly after the show came out. Yeah, that was a... You look at all the big, busy YouTube channels that stream trading, successful or not, their income comes from YouTube, not trading. Probably. But that's where I'm kind of getting at, is that, like, I think that if there's a guy on YouTube that really knows what he's doing and is making a lot of money, I don't think that he will have the most popular channel. I think that he'll probably have an even less popular channel than this. Right? Like Raging Kitty. Raging Kitty was a guy that he had a strategy that, hey, maybe it's not a good strategy over the long run. We'll see. But he netted millions of dollars with it. And guess what? He had hardly anybody. He would come in and he would do these 6-hour streams where he would explain everything, and his channel was less popular than this one. It is interesting to me, though, why do the channels that blow up in the trading arena, why do they blow up? Right? Popularity largely comes down to consistent marketing, in my opinion, maybe. I watched one of the trading channels that was being spammed in here was like watching a fortune teller. Well, like, so there's kind of a couple of different levels of this. So, like, there's the equity traders. So, like, of course, more people are interested in equities than there are in futures. So, of course, those guys are going to have bigger channels, right? But then if we just look at the people that just do futures trading, and there is more than one now. When I started, I thought I was the only one, but now there's definitely more than one, right? And what determines how successful they've been? It seems to me that the thing that is the biggest determinant of that is how big of a number you put on the thumbnail. I mean, that's just the way that it is. And I'm not saying that it's wrong if a trader does that, but I don't want to be a part of that. I think that doing that would be would attract the wrong kind of person, so I don't do that. But then when you look on the equity guys, I don't really see that so much on the equity guys. It's just they make content, and it's usually talking about individual stocks that they like. And a lot of the stuff that I see is things that, like, I think anybody that's read a few books would know, and there's a lot of technical analysis, mumbo jumbo, that just has no usefulness to anything. And so I just don't understand why some of those channels end up blowing up and having hundreds of thousands of subscribers, but maybe they're just better at doing the marketing. I've kind of backed off on the marketing a little bit. Like we created the indicators, and I did some marketing. Like I made a website, right? I don't know if it's the most effective website, but made the website, put the indicators together, put it all out there for you. We've got a couple of subscribers, and I hope that they're making good use of it. I haven't heard too much from the people that do subscribe, so I kind of wonder sometimes. But so then it's like, okay, I would like to see more people using it so that we can get more data out of it. But I don't know. Like, how would I change my marketing to do that? I feel like that I would have to market in a way that would attract the audience that I'm not looking for, you know? Some of the most committed viewers are hate watchers. That's probably true, yes. People want to know someone's opinion on a certain stock they're interested in. That's certainly true. That one's a real conundrum, isn't it? Because when you do something, you kind of want to know what the overall market thinks about a thing to check yourself, right? But if I'm on TikTok, if I'm thinking about a stock and I'm on TikTok and I see a popular creator talking about that stock, cross it off my list, man. This guy was doing technical analysis on charts people sent in by super chat. Oh, really? Oh, that is so that sounds so shady. Right? Is that what I need to do? I should go full bore, all marketing, make all the excessive promises, put the course out there. I would like to write a book. I would like to write a book that compiles a large number of public sources of information that I think all traders should be aware of, but apparently aren't. And make it a book and sell it on Amazon, maybe. Draw trend lines for $5 a line, right? I bet you I would be good at that. Do you want to? Let's try it. Okay, guys. Here we go. All right, charts. Oh, wait, I'll bring them over here, okay? Bring it over here so you can still see me. All right, so somebody asked me about the S&P 500, right? Okay. Well, where's my I want yellow? Okay, cool. We're good. We're good. We'll bring this over here. Okay, so you can see here there's this line that's been some long-term resistance. Yesterday, they peaked up a little bit above it, but came back, and now today we're opening above it. So that should be good for a move to the all-time high at 39.60 up here and then above. So we're bullish here on the S&P 500. There's your technical analysis for the S&P 500, yeah? Pretty good. Pretty good. Or wait, we could do it again. Look. Daily ES. Okay, look, we're just bouncing off of the 50-day moving average, so that means we're going to go higher. You want to be long. Hope you bought the dip, want to be long. Next time it comes below that 50, buy the dip again. Good, right? There's your technical analysis. Oh my gosh. Now, the 10-year treasury here. All right, well, there's a very clear downtrend, especially this thing. Ooh, okay, right? But we've got a pretty solid uptrend right here, and we're kind of coming down into here a little bit of a tail. So here it looks like we're going to get a higher low. So here's a double bottom, and then here's a higher low. We get a higher low. We should continue back up, and we should try and fill this gap right here up to 134.24. Kathy buys Roblox? Oh my. You want okay, Roblox? Let's go look at that one. What is the ticker for it? RBLX? RBLX. Okay. Wait, we don't want 15 minutes. We want 5 minutes. Okay, so here you can see there was the IPO yesterday. They did okay. A little bit of a ramp overnight. So this, this is going to be another higher low. So we should see this go even higher. There we go on Roblox. Give me a Fibon. I'm a Capricorn, if that helps. Adrian. Oh yeah, actually that's a good point. Is can I draw those kinds of fans? Let's see here. Technical analysis, support and resistance. Oh, it won't do it for that frequency. What I can draw a fan. Yes, there we go. Oh, I screwed it up. Okay, there we go. There's the fan. There's your fan. Okay, so today that means that we could be up into the 80s, yeah? I don't even know how to use the Fibonacci fan. That's funny. We're a little early for a while. They're not really moving. Wait, did they get halted? Nah, they're trading. 72. I kind of wonder about the role. I don't know enough about that game itself that I'm kind of shocked that it's a stock. I kind of wonder about a company that's just a stock, right? Anyway, okay, GameStop. You get GameStop. Let's go look at GameStop. Here we go. Oh man, yes, GameStop. Okay. This one is so bad because it's like I know what I have to say, but it's just so awful to me. So just remember that this is for entertainment purposes only, okay? So here you got GameStop came up, and then this move down here that was that should never happen. And now here we're going higher again. So again, this should go higher, and we should go and touch the all-time high at 500. That's what GameStop means. This was manipulation, obviously, from the shorts, clearly. No, that's just so you know what happened on that one. From the data that I've seen is that there was that little move down there, which ended up being enough to halt the stock on the short side. And then as soon as that happened, all of the market makers bailed, and that's why it dumped as far as it did. So it appears to me that retail traders are buying up the stock and the market makers are just going along with it. So you got to be careful, because as soon as a big guy tries to cash out, you get one of those. So I'm plus that kind of volatility, I don't really want to be in GameStop, but Capricorns find it difficult with taking losses. They need to really work on their trader psychology to become comfortable with taking losses. Oh gosh. Where are you getting this from, Win? Did you look into Murray math? Oh, Rick. So I did, actually. Kind of. I didn't backtest it, to be honest with you. Here's what I did. This was really interesting to me. I don't know what you'll think about it. I'm long sets analysis. I'll see you. Oh yeah, that's what I forgot. I forgot to come over here. Yes, you know where. So right here, this is going to the moon. Yes, there we go. The moon. That's supposed to be the moon. Okay. If somebody comes in and says that looks like a boob somehow, because that's what you guys always say about the pictures. Okay, no, Murray math. So this is what I did that day. Murray math. Okay, what is Murray math? Oh, look, the top post is on Futures.io. Okay. Oh, wait a second. The person that created the thread was Big Mike. Okay, that's not the sort of thing that he would post to these days. Oh, it was 2000, and it was a long time ago. That was 2009. Okay. Well, let's see. Has anybody said anything about it recently? Okay. Read through here. Can see SB. This guy, he's been getting around a lot these days. He's been in here a few times, hasn't he? I can't wait. Maybe not. Going through. Most of these are still from 2012. Okay, wait. Big Mike posted in here. Okay, so 4 years later, I want to make sure you understand and know certain terms. Don't you mean no uncertain terms? Anyways, that I no longer feel Murray math levels are useful. You can understand more on why I feel that way here and why I think you believe it is so interesting. And then he links the thread that they have on the forum, which gets referenced a lot on random line theory. In short, use whatever you want, but use it for the right reasons and know full well it is not predicting anything, Mike. So I stopped right there and I'm like, okay, I don't think it means anything. But more so than that, when I started getting into like how it actually calculates the levels and everything, I was like, well, this is a lot of nonsense. I liked that it was based on 50% and everything, but I just didn't see anything in the math that suggested why it would be effective, you know? Man, I guess I could still be along this, couldn't I? Doesn't show me where I really got out at though. I got in at 15. It's been slow going, but it looks like a strong trend here in the E-mini. Oh yeah, that's what we need to do here. The E-mini. Yeah. I will close that one. The E-mini. Here you can see we are pushing the top of the Bollinger Band, so we should probably come back, take out the ATR stop, and then flip back around and move higher, and maybe we'll try and maybe we will make a shot at that all-time high. Well, they could extend a little bit further at least. There you go. There's your technical analysis on the 1 minute chart. What else do we got? Oh, go gold. We gotta do gold. Wait, where did I there, I still got it. Gold. Here you go, gold. Gold is in a downtrend, but here again, look at there's a higher high. So yes, we should be able to recover back here. And I think that what we should see is it should go back above 1820 here and then come back and find a base and go higher. Yes, sir. How often do traders get a long streak of luck that makes them believe in these ridiculous systems? That's a good question. Do you code strategies for others? Absolutely. Anytime that somebody comes in with a really specific setup, I backtest it and give it to them. Sometimes they're kind of vague, and so I kind of talk back and forth to try and get it more pinned down, and they're not able to do that. And then the conversation usually drops and they lose interest. But yeah, especially if you have a specific setup, we can try and code it. Well, that baby just came in from outside. I don't know why he was outside, but he even if it's cold, he does not want to be brought back inside. He wants to be outside. NQ not really tracking the ES chart today, although it is up 2% compared to the ES. Yeah. So I think what's going on there, though, is that the people are expecting people to spend their stimulus checks on the market, and so they expect that money to go into tax. Like, that's what I think goes on in that. Adam Grimes talks about how he got very lucky with Cam and all that. Yeah. Well, so what is it? streak calculator, here we are. So you find a lot more discussion about this for betting, but here we can say, okay, in a series of, let's say, 1,000 trades, in 1,000 trades, and you were saying, didn't you say how big of a streak? Well, let's just say that 10 trades in, let's say that 12 trades in a row is a lot. And let's say that your loss probability is 50%. Then we calculate. Okay, so the probability of getting a streak of 12 is 10%. Is what it says. There's another one somewhere. I've seen another one that it'll actually give you like a table. Took him many years to finally realize it didn't actually work, right? But then for day traders, usually it's more like this, right? 45%. Get a streak of 12, it's not as likely to happen. But then what happens is that people come in and they take double risk reward, so then your probability is actually 60%. Oops. And then the chances of getting a run like that is almost 50%, 58%, right? And so this is why people think that this is why I think you really got to be careful about risk rewards where you're taking on a lot of risk. Gabby takes on a lot of risk, but when we back tested her, she won even with equal risk reward. And there's things about the setup that makes taking on the additional risk make sense. And it is based on some mathematical theory, although that doesn't mean that the way that I'm applying it is proven per se. That's why we're still testing it and everything. I think that on the AM contract, is it 39.47? I think that sounds close. Man. House votes to expand background checks for gun purchases. Is that not the FT says that he thinks that they're going to make it to the all-time high today. I'm wondering. So it had a pretty good move, and they're getting pretty good momentum. It kind of looks like I'd still want to be in. Like I took it off after there was a pretty good excursion back against it, so I'm glad that I took it off. But then since then it's been going. Okay, so I got 39.76 and 39.50. So yeah, based on volatility, there's not a very good I don't think that that'll be good for today. But maybe they'll do it anyways. It's another 20 points up. What about the probability of it due to randomness versus probability of an edge being real? Well, that's where I would cite this study where a guy went in and he did some 300,000 different technical strategies found through data inspection by an algorithm that he wrote. And of those, only 3 of them passed the basic tests that they had set out. And even those 3, there was a lot of question about as to whether or not they would really actually work going into the future. Yeah. So the chances of something that you found being an edge, very small if it's based just on inspection. And this is why I say, this idea that you're going to come in and just watch it and see something in the behavior that's consistent and take advantage of it is based on the empirical evidence that we have on these sorts of things, just absolutely preposterous. Yeah, he risks. He's usually getting 8 ticks and risking 4, but he also takes sequential profits. Yeah, it's been too volatile for a 3-tick stop, huh? I know a lot of people that used to claim that they would do it like a 3-tick stop in the ES. And I'm like, how did anybody ever do that? But then you got to remember that before all of this craziness 2 years ago that, the E-mini would maybe move 2 points in an hour, He doesn't use the DOM. Well, he executes on the DOM, I guess, but he's using a chart strategy. It's still actually technically order flow based. Although I kind of wonder about how much he actually uses the order flow part of his strategy. So when I go back through and I look at it, it seems like sometimes he completely ignores that side of it. Yeah, back when ES was 1,000 contracts deep on each price. Well, it kind of makes you wonder, should they change the tick size in the E-mini? Is it just that we've gone up so high now that they should reduce? You shouldn't have quarter points anymore? I don't think anybody would go for that. At some point, though, it could get too volatile, Changing ES tick size would be controversial. I think MES is a good solution. Yeah. I just really like a thick, large tick instrument. And if there's no longer a large tick instrument for index futures, that's sad to me. But I guess we could all just trade the 10-year. If large tick is what we really want. NQ, on the other hand, how wide does the spread have to get before they change the tick size? Right? Oh, man, the NQ is just insane. But I kind of almost wonder if that one is set up the way that it is for a reason. Like it's there to entice retail traders to think that they can trade it so that the robots can just take their money. I mean, because I just don't get any other reason to trade it. There's just so much risk to trade that thing. You got a bell? Hey, thanks for stopping by, Ace. block trades can occur. Can they? Oh, that's a good question, Stickball. I think no, but I could be wrong. Certainly, if it was like an S&P 500 futures, I think that it would need to be right on the price, but U.S. states lift COVID restrictions, drop mask mandates, and reopen businesses despite warnings from Biden officials, says CNBC. Fauci, U.S. could reach pre-pandemic normals by September. I'm thinking like April. April comes along, I'm no longer willing to put up with with some of this stuff. Gamma Trader says Tesla should be tanking. That looks like AG Dune was doing pretty good earlier today, but then the gold came back, which is unfortunate. Looks like my Sumo Logic is still getting creamed, which has really hurt my portfolio. Why does it always go back to that? I don't know. I mean, it kind of looks like it's trying to build a base here. 25, but I guess we'll see. Need to squeeze, I will get involved. Wait, what? You're gonna get short in the E-minis? Nike to tie executive pay to progress in deepening diversity and helping the environment. So I have I was thinking about this the other day. So I made this TikTok about inflation, pointing out that they really can't calculate what the optimal inflation number would be. I was lying a trap, because the reality is that a minimum wage hurts the economy no matter what. So you have to acknowledge that you're taking a hit for the economy to create a social benefit, essentially, right? But then you have to get into it's to make sure that people have a living wage, and it doesn't do that, right? Which is really the issue that I have with the minimum wage. For protecting workers, I think that's totally fine. But anyways, it was like, we should apply the same logic to the stimulus. How much is too much stimulus? What is the appropriate amount of stimulus? Where's the model that we go through that says this is how much stimulus we should have and where we should put it? Doesn't exist, right? Some people think that we've already put too much in there, but it seems to me that if they were doing a database approach, they would find out what that number is and follow it, right? So I think there's only one conclusion that you can make off of that. Politicians vote for things based on what they think will help them get elected, and not necessarily what is the most effective or best thing for the country. So then I'm thinking, okay, so how do we change their incentives around? Right? Maybe politicians are only paid based on what the economy does. Whatever the GDP for that year was, and that's how much Congress gets paid. Yeah. So if we get like 10% growth, then Congress gets big paychecks that time. Right? I don't know if that would be effective, though. That might cause them to prioritize short-term gains and do other dumb things. But it seems to me like we need to change the incentives there on the political side. No? Or the happiness index or the poverty gap? Yeah, maybe. Then Congress would just juice up GDP with government spending. Probably. Until it crashes, but then when it crashes, they wouldn't make any money, right? That would be bad. So they wouldn't want to let it crash. Is it normal to have a Bollinger Band green surrounded like this, or is it because it's a new contract? I don't know. Did you post a picture I don't see? Oh, my thing, that green, that is just because it is a new contract. Yeah. There's an algorithm that's been here since this morning that has these big orders basically 8 ticks away from the current price. And nobody knows why. Actually, it's 12 ticks away from the current price. So I'm not sure what it's doing, but it may just be somebody market making in that, and that's what their robot does, and they might be doing other stuff in here that you can't see. Prevailing view in Italy, Germany, France, and the UK is that the coronavirus has weakened the case for the EU, really. The last rollover to the layering algo was on the old contract? Huh. Yeah, I mean, I'll see things like that much more commonly in the treasuries, but I don't know what it's doing. This thing is just not slowing down, though, is it? We should have taken another trade instead of doing technical analysis, huh? But now you know what's going to happen with gold and silver, right? So you buy it and... Oh, wait, you know what? We missed one. The most important chart. The most important technical analysis that I could give you guys today. Ugh. You know what it's going to be? So critical. I can't believe I almost forgot it. You made money off my tech. Did you really? Okay, so here it is. Here's the important one. Look at this. Okay, so we've got a little bit of a triangle going on here. Okay, and what's going to happen? So they're going to bust out to new highs, right? Here, this is a pretty good base from nowhere, and here is a higher low. Yep, we're going, and where are we going? To the moon. Hi-yo, it's a wedge. Maybe the moon should be like this. To the moon. Yes, sir. Blue rocket ship. That has a bigger fin. The little windshield. There we go. That's where we're going. To the moon. Big Toasty says I failed my exam. Oh. No, not going to zero. Oh, please no. Please no. I want to become a garlic millionaire. Come on. You know what I want to do? I saw, who was it? Pythia, or I don't know who this guy is, but it shows me to him to me on TikTok all the time. And he was like saying, you know, you get this mystique, like rich people, like they know so much and everything. But then he started talking to them and he was like, oh, these people are just as stupid as I am. Right. No, see, I want the mystique. It should be like, okay, I became a Garlic Coin millionaire. Now all of a sudden I know everything about what every little altcoin is going to do. You know, and I can just come in and do that. I'm kind of liking the technical analysis thing. Maybe we should make a parody channel. Maybe that's what we should do. Is we should have a parody, and I can just do technical analysis for you guys. You can come up with, so I'm speculator Seth. It can be like technical Travis or something like that. And of course I'll do what I just did, where, you know, I decide what I want something to do, and then I'll draw out a technical analysis scenario that makes sense for which direction I want it to go. The problem is that without the context of the stream, I don't know if people would get it. People would think that is actually like for real. Oh, that would be the ultimate irony, is if I made the channel to be a joke and then people start to take my technical analysis seriously. But watch that channel get bigger right? Immediately at 10,000 subscribers. You probably would. Probably it would. Man, I've been watching this thing and I've kind of been waiting. I've been wanting it to change. Oh, I'm surprised I still have this. Oh, that's interesting. Huh. No, I don't need that chart anymore. Get rid of that one. This one right here. So I've been waiting for it to come back to that 10-minute moving average, and it kind of only just kisses it. Doesn't come back very much. So it's like it's up, but the trajectory is not actually that crazy. It's just like a really consistent move. It is really something else. Just a slow creep. Oh, by the way, treasuries came all the way back up and retraced that move that we had down. But, of course, there was a much larger move before that, so. This is J Powell's fantasy? Maybe. You know what? I don't think that J Powell actually likes to watch the market just pump higher no matter what. I think he looks at it and he thinks all of these speculators are going to ruin our perfect policy, you know? Now, that said, Tesla's almost up 4%. I mean, that's a lot. MSTR has been doing okay too, but it's still well below that $1,000 level that they were. But why my Sumo Logic down 12%? There must be some news today. Let's see. Do I need to buy more, or is this really bad news? Quarter 4 2021 earnings call transcript from the Motley Fool. Okay. Oh, I didn't realize that they had earnings yesterday. How come I didn't catch that this time? Shares traded lower after hours Wednesday after the IT intelligence software company posted financial results for its fiscal fourth quarter ended January 31st as guidance apparently disappointed on the street. On an adjusted basis, the company lost 7 cents a share, better than the guidance range of a loss of 12 to 13 cents a share. Okay, so they're doing better than expected. We had a strong finish. I have to subscribe to continue reading it. Sumo Logic also announced it plans to buy Italy's DF Labs, a leader in security orchestration, automation, and response. Oh, really? I like this. I like it. The deal is expected to close in the second quarter. Sumo Logic guided for first quarter revenue between 53.2 and 54.2, which would represent 13 to 15% growth over a year. It said it guided for an adjusted loss per share of 12 cents. Expects revenue between 231 and 235 and non-GAAP revenue per share between 50 and 48 cents. Huh. I guess somebody expected the guidance to be better, though. Well, they can have that. I think I shouldn't freak out too much about it. So I'm in that for the long haul, and I've still got plenty profit baked into it, so I think we're okay. I do wish that silver was still going. I wish that they had opened up at 1660 and went right to 17. Oh well. This is all your fault, LaGuard. Well, the dollar fell back down really hard recently, though, so since the top of the hour, oh yes. Past hour, it's dropped significantly. So maybe gold can get another bid later today. Do we really have? We don't have 61 watching now. We have 31. But if you guys give us a like, dude, what if everybody watching right now gave us a like and we had more overall likes on the video than current viewers at the moment? That would be something that hasn't happened before. Somebody could also stop watching and that would make it go down to 30. That would help. There we go. There we go. We just need 2 more. Just need 2 more, guys. 30. Oh, is it going to do it? I'll show you. Huh? 30 concurrent viewers, 30 likes. I'm impressed either way. Oh, gosh dang it, guys. Somebody unclicked their like. You guys. All right. I think we should call today's video Seth Does Technical Analysis. Why are people always talking about others? Why would you tell me that, Nathan? Yeah, whatever. Never heard of him, but that's cool. Somebody else has a channel. All right, well, I guess it's time for me to get going, guys. Good stream. Friday? Do we not have anything interesting on Friday? Do we? No. We have like retail sales or something like that, don't we? Let us see tomorrow, Friday. Oh, we get PPI and consumer sentiment. The GameStop technical analysis you need now. Did you hit your own? Oh, that's a good point. Wait. It's too late. You guys already took back your likes. There we go. I added it. There we go. Okay. I can change it and use my other account too. We'll have more. In the end, it will have more than 31. There we go. Look, 32 likes and 26 concurrent viewers. So that's great. Thanks, guys. All right. So tomorrow we do got some news and stuff to trade off of. And I don't think that we'll reach it today. The VIX kind of suggests that we won't, but it could do it. They're going to try. They're certainly going to try, aren't they? But if they don't get it today, they'll definitely get it tomorrow, right? All right. Stay profitable, friends.